Have you ever wondered just how massive the Canadian real estate market is and where it's heading? Well, according to iMark Group, the market size reached an impressive 183.8 billion United States dollars in 2024 and is projected to climb to 231.5 billion United States dollars by 2033. That's a steady growth rate of 2.60% over the next several years. Welcome to the Multifamily Real Estate Insights podcast. I'm your host, MacKay. Let's get right to it. The latest findings from iMark Group provide a comprehensive look at the Canadian real estate market, detailing its current state and future trajectory from 2025 to 2033. The report highlights several key drivers of this growth, including population expansion and urban development, particularly in major cities like Toronto, Vancouver, and Montreal. These urban centers are seeing a surge in demand for residential properties, fueled by more people moving to these areas for employment and lifestyle opportunities. With limited land available, high-density housing solutions such as condominiums and mixed-use developments are becoming increasingly popular. By 2025, the market share is expected to see a significant rise in multifamily units, providing affordable housing options while efficiently utilizing space. Technological advancements are also playing a pivotal role in reshaping the real estate landscape. The adoption of digital platforms is streamlining the buying, selling, and managing of properties, making the process more accessible and efficient for everyone involved. Virtual tours, online listings, and data analytics are now standard tools in the industry, allowing potential buyers to explore properties from the comfort of their homes. As we move towards 2025, these innovations are expected to further impact the market size as consumer preferences lean towards the convenience of digital solutions. Real estate companies that leverage big data for market analysis are likely to gain a competitive edge, enhancing their decision-making processes and customer experiences. Sustainability is another key trend shaping the future of the Canadian real estate market. There's a growing emphasis on green building practices, driven by both consumer demand and regulatory pressures. Developers are increasingly incorporating energy-efficient technologies and sustainable materials into new constructions. This trend is not only beneficial for the planet, but also appeals to a demographic that values eco-friendly living. By 2025, we can expect a notable increase in sustainable developments, with government incentives and consumer interest aligning to promote these green initiatives. It's clear from iMark Group's research that the Canadian real estate market is on a positive trajectory, with multifamily units, technological innovations, and sustainable practices leading the charge. This growth is not just about numbers. It's about creating vibrant, livable communities that respond to the needs of a changing population. As we look forward, there's a lot to be optimistic about in the Canadian real estate sector. Halstatt Real Estate Partners, a prominent real estate private equity firm, has announced the acquisition of a 270-unit multifamily community known as the Fountains of Conroe, located in Conroe, Texas. This strategic acquisition was made in collaboration with Expedition Capital Advisors, a Dallas-based multifamily investment firm. Stephen Iannacone, the managing principal at Halstatt Real Estate Partners, highlighted the property's advantageous location near Houston's vibrant energy sector and the Port of Houston, as well as its proximity to the highly desirable Woodlands Master Plan community. He described the acquisition as a compelling opportunity due to these factors and the significant barriers to entry for new development in the area. The partnership plans to implement a comprehensive value-add strategy to enhance the property's competitiveness. Although the community, built in 2008, is already in good condition and well located, there is potential to upgrade the interiors and amenities to capture additional rent growth. Planned improvements include selective renovation of the property's units, reconfiguring and modernizing the clubhouse, and completing exterior enhancements such as repainting, roof replacements, and general site upgrades. Halstatt Real Estate Partners is known for identifying value-add and opportunistic real estate projects across Florida, Texas, and the Southeast. They partner with experienced sponsors to execute strategic business and capital improvement plans. In this investment, Halstatt is collaborating with Expedition Capital Advisors, who bring extensive local expertise and operational experience, having managed nearly 7,000 apartment units across Arizona, North Carolina, and Texas, with over 1,400 units in the Houston metropolitan area. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.